Tired of being broke? Want financial freedom? Then stop whining and start acting. Sick of your situation? What are you actually doing about it? Complaining won't fix your finances. Track every damn penny, slash those useless expenses, and crush your debt like it owes you. Start investing now, no excuses. Sitting around won't change a thing. It's time to hustle, grind, and make your money work for you. Financial freedom isn't a handout, it's a fight. So, are you ready to stop talking and start taking control, prove it, or stay stuck forever?
Yeah, I'd like to welcome you guys back to another episode of Wealth Wise Guru. And I'm your host, John Chaff. And top of the morning to you. And we are at the opening of the bell. And it's September the 17th, 2024. And this one day before the Fed's rate cut is going to be announced on tomorrow. So the market is already responding and anticipating of the Fed rate cuts. Just how much of rate cuts we're going to be getting is a game of wait and see. Whether we're going to get 25 or either 50. You have people like Senator Warren is pushing for a rate cut of 75, which is probably going to be a little bit more than expected. I think we at least should expect at least hopefully 50. Something like that. If not, 25. If it's 25, it's the market will still react in some kind of way, but it may not be as great. But it's 50. It's going to bring a tremendous change in the stock market. And as you can see, this morning my portfolio is up by $570 some dollars in lieu of that the Fed announcement of the Fed meeting, which is, like I said, is going to be on tomorrow. And I have a buying power this morning of a little over $1,000. And let's scroll down and look at the portfolio this morning, see how well she is doing. I see I got a put in the S&P Y 500. I put that in yesterday. It's down now to just about almost zero. So that's going to be expiring today. It's going to be probably not going to be worth anything simply because the market is going up today. So naturally that put is not going to be worth anything. So let's see if we get, I had lost money on this one because I don't know why I put this strategy here in place. Let's see, maximum loss. Then again, let's see. Maybe I could see if I can roll it into another position. See what happens. So I'm trying to look at this and see if I roll this into another position, which one of these would be the best strategies. Should I roll it, or should I buy or sell it off? Okay, we are at 559. A put trading at 564. It's going to be a put, so anything below the striking point, which is 564 for today, is going to be out of the money. Anything above it is going to be into the money. So we're going to go to the top. This is today's date, and we're going to scroll out we're gonna scroll out and pick a different date. Let's see. Let's pick. Let's go 1 month out, which is October. Let's go by to the middle of October. And click on that. And we'll see what we come up with. Let's see. Let's go around the 564 here. Just out of the money. See what kind of stacks we come up with. It's 15.39% volatility. Chance of profit is 32.46. Volume is 43. And our interest is 2,677. Delta here is at 44%. The theta is 1275. So if I was to roll out of this position, I will click roll, hit continue, and see what happens. And so this will cost me $800, $841 if I was to go through this particular strategy. And that's where you get that price is you take the bid price, the minimum bid price, or either maximum bid price. You multiply that times 100, and you get the estimated cost of this particular strategy. And like I said, each strategy that you do in option trading, swing trading, day trading, it costs you money. Whether you're closing a position, selling a position, or buying a position. Each move costs you money. So obviously I'm not going to move on this because this particular put here is done in the S&P Y 500. And a put means that it is going down in value. If you're going to be doing a put on a particular company, and then the safe bet would be the S&P Y 500. But I would not do a put in the S&P Y 500 with the date being so far off, for you cannot predict when the stock market is going to be down. So this would be a great risk. Not only would this be a great risk, the likelihood of it being filled, as you can see, is low. So we're going to we're going to close out of that position. We definitely don't want that. And so far we have lost $133, and today we're losing $35. So we're trying to, and that's the main thing about doing option trading, is trying to mitigate your losses. And so let's see, we could sell it. And if we sold it, then I would get a credit of $19.97. So let's go up here and put a 1 there. And let's put 0.22 there. So let's hit this. Okay, now I'm not gonna do this either. Estimated credit of $21.97, and that's 22 cents times 100. Like I said, you're gonna have to pay for any move that you do if you are trying to move out of this position. So I'm gonna just let this expire worthless, because I only spent like a little over $100 some to get into this particular strategy. So it wouldn't make no sense for me to turn around and spend a whole bunch of money just to get into a new position. And it still may not work out in my favor. So when you're doing puts, you want to do puts when you think that the market is going to be down, when a particular company is going to be down. And the way you figure that out is by watching the news channel, especially channels like Yahoo Finance, either Bloomberg Report, and those are my go-to channels, news channels, when it comes to dealing with the stock market. Now you see this company here, Navigator. I have a put in Navigator. I can't believe I have a put in Navigator, and it expires 11/15. So let's see. Right now, today's return is negative 123, total 170. I'm trying to see if I want to close out this position. If I was to sell this position, the likelihood that this will be $1,159 is what my profit I would make off this particular strategy here. Let's see what the 11:15. And see 11:15. So that's going to be around after the election, and it's kind of hard to predict. A put is very hard to predict. And right now, I have if I was to go through with this, I have already made a $1,100. So let's look at this again. Today is losing. It's down 155 total, and today's is 113 that I lost. So I'm trying to. Sometimes you got to know when to take your losses and run with them. So let's go ahead and close this out. I'm gonna go ahead and close this out and see and take my wins. Take my wins with this one already, because this is a put. Like I said, a put is very hard to predict, especially when it's what you call one that's 60, 30, 60, or either 90 days out. A call, the longest is, if you have a call on a particular stock, the longer it's out, the better chance of profitability that it could be. But a put, the longer it's out, the greater amount of profit you could actually lose, because like I said, the market is a forever bullish market, and so when it do pulls back, the market is correcting itself, and so you really can't time the market. So let's go ahead and let's take our wins on this one. Okay, that's been filled. Okay, and that gives me a buying power a little over $3,000. And here's another put. And this position is expires 10/4. And so since everything seemed to be up today in lieu of the Fed's meeting on tomorrow. Let's see, can we close this one out as well? And the likelihood of this is not too profitable, but still get at least $10. The market goes up tomorrow, man, and reacts to the Fed meeting, then it's going to be totally worthless tomorrow. So let's go ahead and sell this on out and get a credit here for $10. And let's see, I want to see. Like I said, this one's today. S&P Y 500. And so what I'm doing is trying to control my losses. So I'm selling out some of these options positions, especially a put. After the next couple of days, I'm not really expecting for the market to be going down, so I definitely don't want to be hanging on to a put, which is going to eventually become totally worthless. So I'm cleaning out these puts. You only put these puts in when you think that the market is going to be going down. And if I'm wrong, then I can always go back and put my puts back into position. Okay, so let me check my status here to make sure I'm not at risk of trading violation. Since I have a margin account, I have to watch the way I trade sometimes. Okay, so my trading violation right now, I can get 3. Right now it's at 0. This is applied when you have a margin account and your margin account falls below $25,000. A day trade is when you open and close the same stock or options on the same day. If you place 4 or more day trades within 5 trading days, and those day trades account for more than 6% of your total trade during the same 5-day period, you will be permanently flagged as a pattern day trader. This could lead to losses, access to the stock lending and cash sweep, and may result in a day trade restriction in your individual account if your portfolio value minus crypto is below $25,000. So we are good on that right now. And as you can see, she then dropped a little bit, but turn around and head back up just a little bit as well. So this is just pre-Fed X meeting or pre-Fed X decision. And then, like I said, the action meeting, Fed X meeting, cutting the weights is on tomorrow. But the market is already reacting to it. And so here's another put here in this particular company. I know I already lost some money. This particular company too as well. This is Urban Outfitters. So far today I lost $60. So yeah, we need to close out this one as well, and take the profit that we have already made. Let's see, and that gives me a credit of $300. So we're gonna go up here and put the one there, and then we're gonna go down here and put 3.10. So it gives me a credit of $309. So I'll hit review and then swipe up. And total value was I think this was it was saying 600, right? Now it's saying 300. So let's see. So it must be more than one position, obviously. So this is still got that gives me a buying power now, $4,000. So it's another put inside here. Obviously, there's another position. So let's go ahead and close this one out of the way. We're gonna go up here and put a 1, and then we go down here and put 3.00. Okay, the likelihood of this being filled is high. We're gonna hit that, scroll up, and that has already been filled as well. And these are puts that gives me almost it gives me 4,600 in buying power. And as you can see, the market is dropping a little bit. It didn't drop down to 170 something. So you don't be concerned with this going back and forth, because the market is going to do what it's going to do. What you don't want to do is sit down and watch it all day, unless you are a day trader or swing trader or option trader like myself. So I'm just simply getting rid of these puts. I don't need to hang on to some puts when you're expecting for the market to go back up in value, and it's going to be going back up in value due to the Fed meeting on tomorrow. So whether it be a 25 points or either 50 rate cut, then we should expect the market to react in some kind of a positive way. And so I'm not going to be buying. I might buy a little something, not too much. Walmart here. Yeah, see, I do have stocks, a little stock in Walmart, not too much. There's $1 billion company here, and I know a lot of you frequent Walmart. So if you're going to be spending money at Walmart, why not invest invest in Walmart as well, and own a part of their wealth. Shares right now, Walmart only $80. It's usually around 140 or either higher. Walmart shares are, so let's go with two. And you notice I only buy in the red. I'm not buying in the green. I'm buying the red. I buy in the red, and then I hold. When you buy in the red, that means you're getting a discount. You want to buy in the red, and then you want to take profit in the green. Most of you do just the opposite. You want to buy in the green because you think you're making money. Actually, you're cutting your profit by doing so. So you always buy in the red, and you take profit in the green. Even the NASDAQ is down today as well. Let's see. So let's buy one share of NASDAQ. This is Costco. I definitely ain't gonna be buying that. That's $900. I ain't trying to buy $900. So since that's $900, we can buy it in fractions. And then let's go up here to the top here and click dollar amount. And then I'm gonna buy $50 worth of it. Some stop options. Some stop apps. Stop apps. They offer you this particular strategy of being able to buy the whole share or either buy it in dollars. Dollars is the same thing as fractional shares. Thereby giving you the power to be able to buy a stock if it's too expensive to buy it at a lower rate, or whatever you could afford. And you can buy a stock for $5 if you have a particular investment app that offer you fractional shares, which is dollars, as well as whole shares. And I know the platform I'm using right now is called Robinhood, and I know Robinhood offered that, and I don't know who else offered that. Some app platforms offer that, and then some do not. It's Pioneer Technologies still bargain. Look at that, $36.14. I own 109 shares of it. This is going to be the next Nvidia or either Tesla. So I'm trying to load up on as many as as this as I can, why it is still a bargain. So we're gonna go up here, switch back over to shares, and then we're gonna we're gonna be purchasing 2 shares this morning of Pioneer Technologies. So right now I own a little over 111 shares of Pioneer Technologies, valued at $4,019. Today's return is a -20. Total return was a plus $538. And we're going to be checking out this app in just a few moments, and we're going to be going over to ROI platform. ROI platform is give you a more deep, in depth of your portfolio. So no matter which trading app you are using, you need to add ROI to that with that platform, so it'll give you a better measurement of what your portfolio is really doing. Give you a more in-depth look at your portfolio than the actually investment portfolio that you have. And you can also buy, sell, and trade with ROI as well. So we're going to be going over to that momentarily and see what our total profit is doing for today. And we're going to be looking at what our favorite stock market investor is also doing for today. And so I have to log into my app, and the way it logs in, it logs in with the recognition of your face, so nobody could actually break into your account. Even if they did break into your account, they still couldn't do anything, because, like I said, the security measurements is recognized by your face, and so two people don't have the same face. And you can either use face recognition, or either password, or either fingerprint. So I choose to use face. And right now the net worth is up, and it's at $121,307. Today's gain is at $3,300. And I have 9 copy trades from this particular apps, valued at almost 7,000. Stocks, I have 186 stocks, valued at $97,265. ETFs, 34 ETFs, valued at $6,500. And options, I have 15,000 in options, 32 holdings. So let's pick on, I was looking at our favorite trader and see what they're doing today. Copy new portfolio. See what Warren Buffett is doing today. I like to really trade like the Congress. That's my popular trader. That's the whole Congress. And as you can see, they have 65.2% in the dividend. So let's go on here and click invest. And today we're going to be investors. Say let's go with $130. We're going to click review, and we're going to slide this over like that. Okay, I got to put. And that's going to complete that. Close that out. And let's take another temperature check. Still have a little over $4,000 in buying power, which is great. Buying power is the same thing as cash. So if you guys need cash, you can take this money out and put it in your put it on your debit side of your, spending side of your debit card. To do that, you just simply click on that number there. And I have a low risk of a margin call right now. So we're gonna go up here and click in this area right here. And if I want to withdraw, I'll simply click withdraw. And I can withdraw half of that, which is $2,000. I can either send it to my bank, or I can just click on this, and I can put it. I can put cash. Put on the spending side of my debit card. So let's go here. Or either I can put it in my Roth IRA. And let's see. I'm going to be putting a little bit in my Roth IRA. I just put $23. This is just for demonstration only. And let's look at this again. And so right now I have $127 in my Roth IRA. And some of you might be asking why you put so much, why you put so little. Because I'm still trying to build up my portfolio. And I got 50, 60, 100,000 in my portfolio. then I'm able to invest a huge amount of money into my Roth IRA. And once you get that size and you want to make a withdrawal, you put some of it in your Roth IRA, then you are deferring taxes on that particular money. But if you decide to take it out at a later date before it actually matures, then be aware that you are going to have to pay taxes on that money. But if you're over a certain age, like 65, 67, something like that, then your tax liability on a Roth IRA should be if not, it should be minimal. If not, it's not zero. Just depends on how long you have had your Roth IRA account. And I'm 62 years old, so I don't have I am already new to the retirement world. And you are viewing another episode of WealthWiseGuru, and I'm your host, John Shaft. And I do believe we're going to be closing out this video for today. And in lieu of tomorrow's FedEx meeting, hopefully it'll be a very positive one, and it should have a significant gain on the market until tomorrow. So unless something drastic happens today, then I will see you guys on tomorrow. May your trade be a good one. Happy trading day. Have a blessed day. Don't forget to hit the like button on your way out. And we will see you tomorrow morning at the opening of the bell. Again, we thank you for watching.
Trading is your destiny. Some are born to trade, others find it along the way, but destiny brings the true traders to the game. It's not just a job, it's a calling. Are you called to this? Drop the reason you started trading in the comments.